The old way of doing business in rural India is officially dead. Not dying, not fading, dead. As of today, March 25, 2026, the digital rupee has completely reshaped the landscape for small business owners and lenders alike. And if you're not tracking how this programmable currency is unlocking billions in credit, you are genuinely missing the biggest financial shift of this decade. Today we're going to break down exactly what changed, who it's hurting, who it's helping, and where this is all heading. Let's start at the beginning, because to understand what's changing, you need to understand what the digital rupee actually is. This isn't a cryptocurrency. It isn't a UPI wallet. It isn't Paytm or PhonePe. The ERS, India's central bank digital currency, is the rupee itself, just in digital form, issued directly by the Reserve Bank of India, backed by the full faith of the sovereign. The difference between a RIN 500 note and an ERS 500 token is that one is paper and the other is programmable. And that word, programmable, is the word that changes everything. Imagine a government subsidy for a farmer. Right now, that cash gets transferred, and there is nothing stopping it from being spent incorrectly, or lost to a middleman, or diverted entirely. With programmable ERs, that subsidy can be tagged. It can be coded to only work at agricultural supply shops. It can expire if unused after 60 days. The RBI tested exactly this. In April 2024, IndusInd Bank ran a transaction where farmers received digital rupees as compensation for carbon credits. Not cash. Programmable tokens tied to a specific verified transaction. That's not science fiction. That already happened. By March 2025, it had expanded over R1,016 crore in circulation. That's 334% growth in just 1 year. And that was before the 2026 nationwide expansion phase kicked in. But here's the piece the headlines keep missing: the offline capability. Most of rural India doesn't have stable internet. That was always the excuse for why digital finance couldn't reach villages. The ERS kills that excuse. Zero connectivity required. This is an absolute game changer for Tier 3 districts. Using NFC technology, the same chip that lets you tap your credit card, the digital rupee can now transfer between two phones without any internet. Zero connectivity required. The old frictions of physical cash, counterfeiting, transportation cost, are gone. If there is a villain in this story, it's the Sahukar, the informal rural moneylender. For generations, small farmers and roadside vendors had exactly one option: walk to the local moneylender, accept whatever interest rate he demanded, often 3% to 5% per month. Many couldn't repay. Put up their land or their gold as collateral and pray they could repay before the rates compounded into something catastrophic. Formal banks simply couldn't serve people who had no verifiable income history, no credit score, and no collateral. The informal credit market in India was still accounting for a massive chunk of rural lending right through the early 2020s. The bank says no, and the Sahukar says sure at 40% annually. The digital rupee breaks this cycle at its root. Every transaction made in an ERS wallet creates a transparent, immutable record on the ledger. Take a vegetable vendor who does 400 transactions a month. She has no CIBIL score. She has no salary slip. Under the new system, her wallet tells a complete story: her transaction velocity, how often money flows in and out. This is what is now being called flow-based lending, and it's replacing collateral-based lending in the rural market. The account aggregator system is now working in concert with CBDC wallet data to produce what amounts to a real-time score. Not the static, once-a-year CIBIL number you're used to. A live score that moves with actual behavior. Is the moneylender completely gone? Not yet. Adaptation takes time. But the power dynamic has changed forever. Digital literacy gaps remain. But for the first time, rural borrowers have a bargaining chip: their own data. Priya runs a small weaving cooperative in Rajasthan. She needs Rs 15,000 to restock her raw silk inventory. Under the old system, this is a 2-week ordeal. A branch visit, a pile of documents, and eventually a rejection. Under the new system, Priya opens her ER's wallet. The embedded lending application reads her last 6 months. A smart contract, code that executes automatically when preset conditions are met. Runs the analysis. 14 seconds later, Rs 15,000 appears in her wallet, tagged specifically for inventory purchase, dispersed automatically. No branch, no manager, no paper, no waiting. Administrative cost has dropped to near zero. Banks can now profitably service loan ticket sizes that were impossible 2 years ago. The minimum can now be Rs 500. Women-led cottage industries are seeing a sudden surge because the collateral requirement is gone. In rural India, land is almost always in the husband's name. Women were systematically excluded from formal credit. Flow-based lending doesn't care whose name is on the land deed. It cares about the wallet. They are now the ideal borrower. Now let's talk about the backbone of retail. There are roughly 12 million Kirana stores in India. They are the backbone of retail for a country where organized retail penetration is still limited. ERs is changing their economics. They operate on razor-thin margins. The ERs is changing the economics of the Kirana in 3 specific ways. First, zero MDR. Every R100 transaction is a full R100. For a Kirana, that is the difference between viability and loss. MDR is the fee merchants pay every time a customer pays by card. The Digital Rupee carries zero merchant discount rate. Every R100 transaction is a full R100. No fee, no friction. This is pure digital value. Second, automated inventory. When your rice stock drops below 50 kilograms, a pre-authorized ER's payment automatically fires. Money moves only when the condition is met. Supply chain automation at the village level. No manual orders. Fresh stock is scheduled for delivery. Zero manual negotiation. The future of the supply chain is here. Third, digital identity. The ER's ecosystem integrates with India's full digital identity stack. Aadhaar, DigiLocker. A Kirana store owner now has a verifiable, auditable financial identity that is indistinguishable from a business in any metro. A bank in Mumbai or an NBFC in Bengaluru can look at that wallet history and make a confident lending decision. Geography is irrelevant. The credit quality speaks for itself. This is what financial inclusion actually looks like. It moves beyond rhetoric. This is systemic structural change across the entire Indian subcontinent. So where does this all go? Let's be honest. This is not a finished revolution. Adoption is still in the single millions. Digital literacy gaps remain. Rural infrastructure still needs work. Privacy concerns deserve serious policy attention. This is a transformation in progress, not a transformation completed. The RBI itself has acknowledged that. But the direction is irreversible. Rural capital, money earned in villages, no longer immediately flows out. Data privacy remains a core pillar. When a vendor earns ERs and spends locally, that capital compounds locally. The RBI has acknowledged adoption takes time, but the velocity of money multiplier effect is now local. It builds local wealth. Intermediaries are being bypassed. The wealth stays where it was generated. The ER's ecosystem keeps rural wealth in rural communities in a way cash never could. It builds a local economic future. It compounds, it grows, it empowers. The architecture is set. Now look ahead to 2027. Cross-border CBDC payments are firmly on the roadmap. Remittance fees will soon be a relic of the past. 2027 is the target for global expansion. Structural shifts are happening in international trade access. What does that mean for rural India? It means artisans could receive international payments directly into their wallets, receive payments without a forex broker or a 5% remittance fee. Global markets are now open to the village artisan. India is already in cross-border CBDC trials with the UAE and Singapore. This is a structural shift in participation. The geographic ceiling is being dismantled. Zero access to global markets is no longer the reality. Perhaps most significantly, the generation growing up in rural India right now will inherit a frictionless system, where their address is not a ceiling, where the quality of their work ethic and transaction history determines access. That is the actual promise of the Digital Rupee rollout, not the technology, the fundamental leveling of the field. For the first time in modern Indian economic history, tools of formal finance are being designed around rural life. Every major financial transformation in India's history has had skeptics. People asked who would use UPI in 2016. Today, UPI processes over 20 billion transactions a month. The ERs is earlier in that curve. Questions deserve engagement, adoption, privacy, infrastructure. Those are real questions. But the architecture is built. The direction is set. The ERs is moving fast. Keep your eyes on the rupee. It's moving fast. The tools of formal finance are being designed around the reality of rural life, not the other way around. Subscribe if you want to be here when we cover the 2027 cross-border expansion. That story is even bigger. The Digital Rupee rollout has reshaped rural lending forever. Until then, keep your eyes on the rupee. Thanks for watching Corporate Postmortem. Subscribe and stay ahead of the next financial shift. It's moving fast. We'll see you in 2027.